So, you asked me to talk about innovation and fintech. It's clear that fintech is something that is at the center of a lot of the preoccupation of institutions like IFC and the World Bank, but also other people. I was in Davos and had a meeting with the Queen Maxima, who has been a champion in 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 financial inclusion, and who has been in my conversation. I told her, "What do you want to do next in terms of advocacy?" What came out very strongly is fintech, and fintech is the emerging economies, and particularly, she said, how the role of fintech can help closing the gender gap and giving opportunity to women to be much more involved in the former labor market and other entities. So we know that innovation has been saving a lot of lives and solving a lot of problems. I will not repeat M-Pesa. You heard all the story of M-Pesa, but you have many other examples which are interesting. And it brings drive down cost of service. Household welfare is improved. We see a much more transparency, much more transparency in the process. But I would like just to talk about a couple of issues that are coming up as we are looking at unbanked people, looking at the business models that have been innovative and agile, to look at disruptive technology and disruptive interventions and how it can affect the situation in some of the country in terms of innovation. I will talk about my own country, where IFC has been invested in a startup which has been very disruptive. Actually, it was a startup based in the West Coast in California on fintech. And just to give you quickly tell you a little bit about that story. You had an incumbent, which was a market dominant player, and where using taking advantage of the strong interest that people had in fintech and financial inclusion, where being having markup, which was kind of seen as being significantly too high, and the lack of competition didn't allow to drive down prices. Just give you an example of concretely what I was meaning. For each transaction, they were taking 3% fee. And when you were depositing money in your account and withdrawing money, you had to pay anytime you deposit money and to pay anytime you are withdrawing money. So startup, which was a disruptor, came to the market and providing a few QR card, and that allows anyone to transact with an agent. And they were able to announce a cut of the fees to 1% and zero tax on fees on the withdrawal and deposit of money in the account. 3 months later, that incumbent lower now their fee to 0.8 or 0.6. So the welfare gain has been massive in a very short time. And what I'm talking about is 6 months period. It's not a process of 5 years. It's 6 month period, total change. And that was very important during the COVID-19 response, because it allows people to be able to access services much cheaper. We saw also the reaction in Kenya, the government response in incentivizing the fintech provider to reduce significantly the cost of it by removing some of the taxes and creating a little bit more competition in that context. But one of the things that we have learned is that some technology are being adopted faster, like blockchain, and they are making already a big difference. We are trying to push a lot for intra-Africa trade. And as you know, recently in Africa, for those who are following that continent, they have African free trade agreement. And one of the challenges is how to use that to increase the value, to improve the value chain and the supply chain in that region. And one of the big solutions that people have been finding is the use of fintech, of blockchain, to help banks using that instrument for trading and securing a contract, but also to be able to just increase the value addition created in in the continent. So when we look at all these and we're talking about the investment, there are some questions which are coming more and more. And I think there were some two interesting books released recently, one by Philippe Aghion and another one by Philippon, which was quite interesting, looking at the competition policy and the questions that they were raising. I mean, there were a lot of discussion about the power, antitrust and merger, and the market power of some companies. And for those who read Philippon book, he started with why the cost of telecom is higher in the US than it is in some of the European countries, when we assume that there is more competition in the US than you have in Europe. So a lot of the questions were linked, obviously, to the antitrust policy, but it was not all of this. So we have, even in that space, in more advanced economies, some question links to the policy and the regulatory framework in place to improve competition and be able to bring down prices and increase household welfare. The second one is that when you're talking about competition, as we are talking often, people are talking about concentration indices, and I will not talk to this crowd about measurement. You're dealing with these issues every day, and and I'm learning a lot from you guys on how to do. But the issue of measuring concentration is also something that, particularly in emerging countries, is important. And as we deploy new technologies and new tools in fintech, I think it will be continue being an increasing issue. We have also some regulatory issues that are coming out from our observation at those markets. Is the issue of network and interoperability. It's clear that if we don't solve that issue, we will not be able to move to the next step in terms of gain and productivity gains that the economies can be facing by the introduction of increased introduction of fintech and increased competition in this sector and increased innovation that we will have to be. And lastly, the point is how the accumulations that the incumbent have made on the market will help them to do more R&D and therefore more innovation. So the link between the accumulation and the dominant market position of some of the incumbent and R&D in this particular sector is something quite interesting. But what is the beauty in the fintech industry is that you don't need to be in the country specifically to be able to bring the innovations that have been created in the market, and the adoption of these innovation has been pretty fast in a lot of market. As we go, we are seeing a situation where we would like to work with you at least to be able to improve. One of them is to look at the regulatory framework, as I mentioned, but also the capital access and of fintech in those emerging economies. We are seeing increasingly a phenomenon whereby you have startups which are growing, and by the time they have reached a certain size, they are starting to be bought by the incumbent, and therefore strengthening the market power of some of the large companies, and therefore reducing the level of competition, which is certainly essential for innovation and technology adoption in those countries. So I think that all the work you are doing on this will be very important. As we talk, I have asked our economic vice presidency to work on this issue, and I know that they're talking to you, Laura, and colleague of the lab, the lift, to see how we could collaborate on this issue and bring the data that we are gathering in our project financing to be able to inform that conversation and maybe able to do more research in this area. So I will stop here. I just wanted to share with you that at the IFC, we are taking very seriously this work on inclusive fintech. This is something that we would like to learn more about, so that it can inform the design of our operation and the projects that we'll be financing in emerging economy. So Laura, I will stop here, I'm sure that you guys have a lot of things to discuss, but I just wanted to give maybe that perspective that could be so that you can see a little bit what an institution like IFC is doing in that area, and the questions that we start thinking about. So I will stop here.